And it's a nice wee vehicle that's established because you've established in a way that you won't pay a penny tax. Under the rules that we spent time and weeks and weeks in relation to closing loopholes so that that funds like this, Section 110 funds, would actually pay tax on interest, you have found the way around it. Isn't that right, Mr Masding? Because of the fact that you will hold 5% of the beneficial interest in this fund, it will now exempt you from tax in relation to the interest, or exempt the whole vehicle from tax. Is that not the case?
No, we're required under law to hold 5%, Deputy. That's the requirement. It's
well, the fact that you hold 5%...
It's nothing to do with tax.
Well, the fact you hold 5%, exempt the SPV vehicle, which we don't have a clue who owns it, exempt them from tax as a Section 110 company. Doesn't it avoid, and doesn't the prospectus specifically mention the legislation that we introduced in this committee to actually close this loophole, that in the prospectus you said, well, way around it because of the fact that permanent TSB, as the originator of these loans, will hold a beneficial interest of 5%. Is that not in the prospectus black and white? If you don't want to admit it to you, I'll read it out to you if you want.
We're required as the originator to hold 5%, Deputy. That is the requirement of being an originator.
And does that fact allow this vehicle, which you will have 5% interest in, and whoever else the bondholders are will have the other 95%, avoid them paying tax as a result of permanent TSB holding the 5%?
As originator, we're required to hold 5%.
Do you know the answer, or are you just going to repeat that point over and over again? Because I can go and read. I'll actually read it out if that's okay. On the basis of disclosure elsewhere in the prospectus, the seller is a regulated credit institution which is an originator for the purpose of Article 4 of CRR and will retain in accordance with Article 405 of the CRR an economic interest for the purpose of securitisation. Accordingly, the transaction should be a CMBS or MBS transaction and therefore exempt from the documented deductible restrictions pursuant to Finance Acts 2016 and 2017, which we worked hard to close down this loophole so that mortgages that went into Section 110 companies were not tax-free. Isn't that the case? Is it not the case that this vehicle, which permanent TSB will have an interest in, 5%, will be exempt from tax as a result of the structure?
The reason, as I outlined to the Deputy before, for the creation of the securitisation vehicle is that we would try to find a long-term investor which would match the requirements of the customer in that regard, i.e. create the securitisation vehicle and find an investor. It was in no means to do anything with regard to tax issues.
But are you exempt from tax?
PTSB are not exempt from tax.
No, this vehicle in which you will have 5% interest in, economic interest in.
It is, as I understand, a Section 110 company, and the regulations would apply to as such. But the core issue with regard to creating the securitisation vehicle was that we could, instead of a pure loan sale, and indeed we were here not so long ago with Gloss and talking about the sale of
I know that. Look, I'm trying to get to a point, and you're really filibustering here. Maybe Mr Ryan, because you seem to be quoting from the perspective. Would you acknowledge that in two separate sections in the perspective under the taxation heading and earlier that it clearly states that the SPV vehicle that you are setting up will be exempt from tax and will avoid the restrictions in relation to the 2016 and 2017 Finance Code that we passed in the House of the Oireachtas? Is that not the case, Mr Ryan?
With respect, Deputy, the Glenbeigh securitisation vehicle is a vehicle that we service. I'm not best positioned to answer in terms of the tax status of the vehicle itself.
Mr Ryan, you've with other colleagues and Deputy McGrath, you repeatedly talked about the prospectus. I have the prospectus. That's what's in the prospectus. You're able to talk about what's in the prospectus. I'm just asking you, is that not the case? That in the prospectus, see, this is the difficulty. You just won't admit something that is black and white. You just won't admit it because you know why? Because the public are outraged at what permanent TSB has done. And this is a double outrage, the fact that you're now offloading these mortgages to a vehicle which you will benefit from as the CEO of the bank, to a company, to a vehicle that has circumvented our tax codes legally, but it's done in that way, and you won't even admit it. And you're wasting my time, you're wasting the committee's time, you're wasting the public's time by just admitting something that's black and white.
So this is my 5th appearance this year, Deputy, and I would be deeply disappointed if my school report said I was wasting your time. So let me have a go at trying to answer your question, if that would be okay. So the first question then, in order to allow the transaction to happen, it was created as a Section 1110 company. And the tax status of that 1110 company comes with the design of the structure. So I can't make any comment on that. It's in the prospectus, as you say. Let's not repeat what's in the prospectus. Point one. Point two, in order for the securitisation vehicle to be incepted, and based on, as my colleague Eamon has said, let me describe it as the poor practices during the financial crisis, an originator of the mortgages, which is permanent TSB, is legally obliged to take a 5% vertical slice. That has nothing to do with the insinuations you're making around tax avoidance. So I just want to place that on the record. That's the first point.
Hang on a second. I'm not making any insinuation. I asked the question, which nobody so far, including yourself, hasn't acknowledged. Does it not say in the perspectives that because of the structure that it will be tax exempt?
I've just acknowledged that what you say in the prospectus are the facts. Okay. I am merely saying, Deputy, that. And I apologise if I misunderstood the point you were making. The second point I was making that was, in order for that vehicle to be incepted, legally the bank has to have a vertical slice of the various bonds. That would be the first point. Secondly, then, you challenged me quite correctly on those customers who, as I said in my opening remarks, have engaged with us and feel let down by permanent TSB. And I can empathise with why you are making that statement. In response, I would say the following. The bank has a 16% NPL ratio. Split mortgages and part capital and interest with bullet are NPLs as defined by the rules. As I assured the committee at my last appearance, we were looking at all the alternatives to reduce the NPL ratio. And this was, in our opinion, the least worst alternative. Why was it the least worst alternative? Number one, because we found investors who matched the duration of the mortgages. Number two, because the actual long-term treatments, they transfer in full to the vehicle and their protections are maintained. And thirdly, to the best of our ability, we find a servicer of that vehicle who is experienced in the Irish market. So in summary, your comments around the Section 1110 tax status in the prospectus are correct. Number two, I do want to bifurcate any perception that the committee might have that the bank took the 5% to take advantage of that. It didn't. It has to take the 5% in order for the vehicle to be valid. And then thirdly, whilst I'm sure we will have to agree to disagree, that is the bank's perspective on why this transaction happened, in order to reduce its NPL ratio down to a level that makes it an institution that can compete going forward. When you say
and thanks for actually giving me an answer in terms of that it will be tax-free, and that's what this really pisses a lot of people off, because there's investors there that will be multi-billion euro investors. 95% of the profit made from this securitisation vehicle will be tax-free. Like, you know, they're the ones who are, it'll all be tax-free, but they're the ones who are benefiting from it.